What should you do with your car and your car loan if you file a Chapter 7 bankruptcy? The options are reaffirmation agreement, redemption, surrender, which is self-evident, you're just giving it back, or retain and pay. I'm going to talk about those in this video. I'm going to bookmark them down below. Should you reaffirm your car? That's a really good question. In Chapter 7 bankruptcy, a reaffirmation agreement is a new promissory note that you make with your car's lender that reinstates the contract that you already had with them. Typically, there are no changes to any of the terms in the contract that you already had. There's a couple of things that happen. It reinstates the contract as though no bankruptcy had ever been filed. It's really good for the creditor because let's say 6 months from now, you get to a point where you can't pay for the car anymore. The creditor is going to pick it up. Whether there's a reaffirmation agreement or whether there isn't a reaffirmation agreement, if you're not paying for the car, they're coming to get it. We already know that. If there is a reaffirmation agreement, they take the car and then they sue you too. So it's take the car, then they sue you. Even though you've had a bankruptcy. You did a reaffirmation agreement though, which reinstated the contract as though there were never a bankruptcy for that particular car loan. If you reaffirm any of those, they can take the thing back when you quit paying, and then they can sue you for a deficiency balance. This, of course, hits your credit really badly because you haven't been paying, because there's a lawsuit. Let's say 6 months after your bankruptcy is over, no reaffirmation agreement, you can't pay for the car anymore, you lost your job, you got hurt, you got sick, who knows why. It doesn't matter why. They take the car back, all they get is the car, only. No deficiency balance, that's it. They get the car, they're done. So that's a big benefit to you. With reaffirmation agreements, we primarily talk about car loans because that's usually what comes up the most. So the bankruptcy code gives you 3 options. Give it back, or reaffirm, which is the new promissory note that you keep paying on the old contract, or something called a redemption, which is where you can reduce the balance on the note to the value of the item. So if you have a car, we're talking about the retail value of the car. So what is the value, the retail value of your car right now in its current condition with its current miles? It could be quite a bit less than the balance on the loan. Most of the time though, since we're talking about the retail value, it's probably pretty close to the balance on the loan. So surrender, reaffirm, redeem. Those are the 3 options in the bankruptcy code. There's a 4th option that California gives you. I don't know about other states. I'm not licensed in any other states. I don't work in any other states. I only work in California.
And I'm not your attorney, and this is not legal advice. This is educational
the 4th option
only.
that California gives you is California said that a bankruptcy is not a default on the loan. Therefore, the creditor is not allowed to repossess the car just because you filed a bankruptcy. In other words, they preempted the bankruptcy code with a California code that specifically says that a bankruptcy is itself not a default on the loan. Therefore, if you keep the car, you can retain the car and pay the monthly payments on the car, even if you never do a reaffirmation agreement. If you decide to retain and pay your car and don't do a reaffirmation agreement, you can never be a day late nor a dollar short on your payment. If you get behind in the payment, they come and get it immediately. You're a day late, dollar short, doesn't matter. That's a default, and therefore they come and get the car as fast as they possibly can. Without the reaffirmation agreement, there is no contract. There's no way to cure a default on a contract that doesn't exist. And that's why they have to repossess it as fast as they possibly can. So that gives you a 4th option if you're in California. I know many other states allow it as well. You'll have to talk to somebody in your state to figure out if this is the case for your car in your state. So the retain and pay option is very helpful. You can just continue making the payments. And if you do the retain and pay option, once the bankruptcy is over, if for some reason you need to give it back, you can without getting sued. Now, the upside of doing a reaffirmation agreement is that it puts good credit on your credit report because your bank will be able to every month list it as a good account in good standing on your credit report.
You can also put bad credit on your credit report if you get behind on your payments.
It can be very, very helpful. I don't have a crystal ball. You don't have a crystal ball. We don't know what's going to happen. You think your job is great, stable, and going to last forever and ever. And I don't know. There's a good chance it won't. In fact, there's a very good chance it won't. Jobs come and go faster than they ever have. Industries come and go faster than they ever have. Businesses come and go faster than they ever have. So I couldn't tell you if it's a good idea to actually reaffirm or not. Unless maybe your creditor will give you a massively better deal than the one you already had when you filed the case. If they'll reduce the interest rate significantly, give you a much better payment plan, maybe a reaffirmation agreement is a great idea. Most of the big banks, no, they aren't going to do it. If it's a small credit union, you may have a shot at making a better deal than you currently have.